From stocks and bonds to the real estate market, the U.S. financial crisis has made a profound impact on every aspect of the investment world. Affecting not only the stability of Wall Street and business across the nation, local and state governments are also facing new financial challenges. As a result, tax-free municipal bonds have been on the minds of nervous investors. With the industry seeing a brutal sell-off in recent months, along with negative media attention, some investors are questioning the future of the municipal bond market.
Tax-free municipal bonds are obligations of state and local governments. Think about them as loans that are being made to the state and local governments by investors. The recession hurt municipal bonds' perception in the eyes of investors in the sense that tax receipts declined, usage fees declined, so the amount of what we call coverage ratios, or the money covering debt service, also declined. Not to the point where we were worried, but to the point where investors thought that they were more risky than they were before. Adding to this problem was the fact that bond insurance companies who insured municipal bonds and put their own AAA rating on them, those insurance companies themselves were downgraded during the recession.
These market disruptions distorted the image of tax-free municipal bonds, resulting in an undervalued asset class.
In the case of a tax-free bond, it used to be that the interest rate on a tax-free bond was lower than a taxable bond, like a treasury security. That's what you would expect because there's an income tax code. But in the crisis that happened since Lehman Brothers and AIG and the failures in the banking system, the tax-free bonds interest rate actually went above the taxable bond rate, which created a terrific bargain for an investor if the investor had the confidence that the asset class was sound. We believed in the asset class, so in our view, these were bargains, people should buy them. But many people were afraid and did nothing during the financial crisis.
Despite the fallout of the insurance industry in a difficult economic environment, tax-free municipal bonds are still an appealing choice for the tax-conscious investor. Financial advisors say bonds have many attractive benefits and can be a vital part of a diversified portfolio.
Tax-free municipal bonds are mostly very safe, well-constructed, so you're secure in getting repaid. The interest you get is exempt from federal income taxes, and it might be exempt from state and local taxes. So you have a safe investment, you get paid a good rate of interest, you don't pay taxes on the interest, and you get your money back at the end.
The type of investor that's right for tax-free municipal bonds is really any investor that's facing a 25% federal marginal tax rate or higher. That in today's world, where most intermediate and longer tax-free bonds are yielding you more than treasury bonds, ends up being an extreme bargain. So for example, if you're able to buy a 5% tax-free municipal bond in today's world, that's the equivalent of almost earning 7.7% as a taxable investment in the 35% bracket, and it's almost the equivalent of earning 7% if you're in the 25% bracket. So it is a very good deal for investors.
Tax-free municipal bonds are also considered to be a safe asset class, making them an appealing choice for long-term investors.
There are all kinds of tax-free bonds. They're not identical. You have to do the research on them to see what secures your payment stream. If you invest with a tax-free bond with the local sewer company or the water company, an essential service of local government, and you have a senior claim to pay you, you're going to get paid. It's very secure. The city or the county needs the water company, and you are the lien holder. You hold the mortgage on the water company. So most of these bonds are very safe and secure, but they require the research to see how you get paid.
Tax-free municipal bonds are one of the few investments that have day-to-day tangibility, unlike other asset classes.
Municipal bonds have a public policy role in the sense that they are the financing instrument for many of what we would consider the tools of everyday life. Hospitals, roads, sewers, things that you use, drive over, get well in. And the fact that many of them have been built by municipal bonds shows that the long-range thinking of municipalities when they put these projects in place are tied into the very nature of the intermediate and long-term maturity of the bonds that are financing them.
We're seeing changes in the tax-free bond area now. There's almost 90,000 separate cities, counties, states, and different agencies in the United States. And they are all going through tightening their budgets, controlling their costs, and improving their finances. That will make the tax-free bond, the municipal bond, an even stronger security for an investor. That process is already underway throughout the country.
Cumberland Advisors, a Florida-based independent investment firm specializing in municipal finance, says in today's rocky economic climate, it's critical to work with experienced professionals who can provide proper advice for any kind of investment.
We manage money for mostly individuals. That means we tailor-make portfolios for clients. We take into account not only their appetite for risk from a maturity standpoint in their portfolios, but also their needs for income, the states that they live in, the tax rates that they pay. So from the bond portfolio management side, we can design a portfolio that's specifically for them.
Since 1973, Cumberland Advisors has been dedicated to helping people in more than 47 states manage their investment portfolios to achieve financial success.
We do what we do. We think we do it well. We try hard. We sell no competing product. We're not on a commission. We are a pure advisory service. There aren't a lot of us. There are some others. And there's a place in an investment portfolio for tax-free bonds if you're one of the American taxpayers who is in one of the higher tax brackets. A piece of your investment money belongs in this asset class.
For more information on tax-free municipal bonds or Cumberland Advisors, visit cumber.com.